Hello everybody and welcome back to the Cyclical Investors Club YouTube channel. Today we're going to be looking at FMC Corp. This one came in by request, and if you have a stock you'd like me to do a video analysis on and it's in the S&P 500, just comment below somewhere and I will put it on my list, which is on the whiteboard behind me, and eventually I will make a video of it. If it's a stock that's not in the S&P 500 you would like me to analyze for $5 a month, I do those over on Patreon, and I'll have a link in the description where you can go join there. And if you are a Patreon member, you get a big discount to my full Cyclical Investors Club service, which has all the spreadsheets. It has a chat room where you can talk with me. I have a lot of ideas that I don't post publicly, and you can read about all my different strategies, and pretty much anything that you want is there. And that link will be down below too. You can either go directly there from that link if you don't want to join Patreon, but if you do join Patreon, you get a discount. Okay. As always, this is not individual investing advice. This is just how I analyze stocks. And I sort of bumped FMC up the list a little bit because it's well, let's just look at what it's done. This is what the stock price has done. It has fallen a lot. I'm not even going to pick the peak. And yeah, so we're down over 60% off its peak. These guys do like agricultural chemicals and fertilizers and stuff like that. I actually have a history with this stock. I bought it when I first developed my deep cyclical strategy. This was one of the first stocks that I bought. And I bought it, I think it was going into 2016, because I just developed the strategy in 2015, and this was one of the first ones. I want to say it was in February, and it ended up producing a double within less than 2 years, I think. I bought down here and then sold somewhere. I forget exactly what it was, but I think it was a 100% return was what I was aiming for, and I got it. So I like this stock. It never quite fell far enough in 2020 for me to buy it. But I have fond memories of doubling my money in less than 2 years with this. And so it had been on my radar, and like 2 weeks ago, it fell down below my buy price that I had in my spreadsheet that I track in the Cyclical Investors Club. And so usually when they get closer to the buy price, I track like 600 stocks, and usually when they get close to the buy prices, then I spend more time on them and do a little bit more scrutiny to see if anything's changed, just to double check everything, double check, my numbers that I'm looking at. And since I had owned this one before, I was kind of looking forward to buying it again. But one of the members was talking with me about it, and they had some doubts, and they pointed out that a short report was out from Blue Orca on FMC, and I actually think short reports are fun to read sometimes because they just are so like bombastic and overblown about everything that they do. But I think Blue Orca is one of the better ones, and I'm not gonna pull it up here because they have a disclosure form that they want people to agree to. So, but if you go over to Blue Orca, you just give them your email, I think, and agree to the terms and conditions, and then it doesn't cost anything, and you can read the short report. But the short version of the short report is that FMC is underestimating the losses not losses necessarily, but the lower earnings that they'll have because of patents that are rolling off or won't be recognized necessarily in several countries. I want to say they lost a lot. You'll have to look this up and read it. But I want to say they had lost a battle in China, a legal battle, and there was questions about Brazil, which was mostly speculation. But combined with a normal, and then they came out. This was before they reported their earnings just recently. And then I think on that earnings report, maybe they kind of had put out weaker forward guidance than there was earlier. So now they're expecting a pretty big dip in earnings here. And I want to say I was looking at it a few weeks ago. The stock was definitely falling, but the earnings expectations hadn't fallen and everything like that. So I would go, that sort of tipped the balance for me to some degree and made me scrutinize a little more. The other thing is debt. So if you look at so when I was buying them, it was kind of back in here. They had maybe $3 billion in debt. And now they have doubled that debt in just a few years. And of course, now we know interest rates are rising, right? So this debt gets a little bit scarier or more burdensome. And when you combine that, and then if you look at the debt to equity, which is usually what I look at with the deep cyclical strategy that I use, I really want to see if it's changed. And it's higher. I mean, in when was I buying it? Early 2016. I mean, it was a little bit lower. But anything over 1, you should probably pay attention to and just be a little careful with. That probably wouldn't totally run me out of the stock necessarily, but if I was on the fence and I was looking at it, this is definitely the higher end. And then, but I think the absolute level of this is total liabilities, not just debt, but again, pretty high. And then on the fast graph, you can go down, and I like to look at the difference between the market cap and the total enterprise value. And so with that, we have about 4 billion is the difference, which is pretty substantial. And so when you say, okay, earnings are coming down, and it's not necessarily like a cyclical downturn, like during a cyclical downturn, like back here, you can see earnings were coming down. That might be buyable because eventually maybe fertilizer prices go up, things like that, and then they can come back, right? And that's how you would make money. But if you're talking about issues with patents, we don't know where these are going to bottom out, and we don't really have any reason to be certain that they're going to bounce back. So for me, I think I would avoid this one. Even though I've traded it and owned it in the past and been successful, I decided after reading the short report, looking at their debt, thinking about, even if it's only half true, there's no guarantee that the earnings are going to bounce back in like 2 years, which is really the setup that you actually want. So when you combine that with the debt, that is a pretty dangerous situation. And so this one's just an avoid for me for those reasons. Now, if you read the report, if you think maybe interest rates are going to come down, then this might be one a person could try to bottom pick. But I would definitely have high confidence in those two things, which I do not have high confidence in. So that's it. I wanted to put this one out there because I really think you want to be careful. I think it's one you definitely want to be careful about trying to catch it as it's going down. Usually with deep cyclicals, I do try to catch them as they're going down, and I was on track to buy this one, and I backed out basically. So that's my thoughts. You guys can do with that what you want, but a couple things to think about before you think about buying the stock. If you like this, hit the subscribe button. I put videos out almost every day now, so and if you have one you'd like me to do, get it on the list. Later.